Did you make more money in your side hustle than you anticipated? Or are you a small business owner that you want to maximize your deductions? Or do you just want to have a smaller April tax surprise? If so, please stay tuned. Today on TN Taxes, I'm going to talk about 7 things that you can do to get prepared for the end of 2025. And I'll be including some of the big, beautiful bill items that were introduced as well. Now, the first thing you're going to want to do is you're going to want to look at all of your year to end income, everything that you've made up until now. The reason being is you want to see what your income is at and if it is the same as what you had estimated. And you're also going to want to look at what your potential income is going to be for the rest of the year. This way, you can estimate what tax bracket you're in. Because with the big, beautiful bill, all of the tax rates that were done in 2017 are now permanent, which is great for you because now you don't have to worry about, did it go up? Did it go down? Is it the same? Well, guess what? It's the same as it was last year. So if you were hovering into the next tax bracket, you can start looking at deductions that you can do now. And yes, there are some, and we'll get into that you can do now to help reduce your tax liability for your April tax return. Okay, so which brings me to the second item. You want to go ahead and max out on your business deductible expenses, and you want to do that now before the end of the year. You need to do this before December 31st. So you want to take a look at all of your business equipment, your supplies, all of those things that you need to do to run your business, and you want to purchase those things now because some of those things are deductible, some of them you can expense off from your income. So these are things you want to get before December 31st. Now, the Big Beautiful Bill did not change anything in regards to business deductible expense. It didn't really go into that. So you don't have to worry about any of that changing. It's pretty much the same as it's been for the past several years. Now, the third item is you do want to check on what deductions are new in the Big Beautiful Bill. And one of the big ones that a lot of people is the tips. Well, first thing is, no, you can no longer get paid only in tips. There is a limitation on how much tips you can take. There is an income limitation, and within that income limitation, you can take up to $25,000 in tips. So for my customers who are like massage therapists or even Uber drivers, you're going to want to go ahead and take out your fee for that service, and you're going to put the tips to the side. And those tips up to $25,000 would then be not counted under the Big Beautiful Bill, but the rest of it is. And then, of course, any additional tips are going to be counted as well. The great thing about this is it's also going to help lower your income tax, but it's also going to help lower your self-employment tax, which tends to hit a lot of my self-employers. It just goes in and then they're like, what? I have another tax? I'm being double taxed? Not quite. As we know, self-employment is really just the Social Security and Medicare that people, or I should say employers, take out of your W-2 that you don't normally see anyways. It's just more obvious when you are self-employed. But again, you do get a deduction for paying that self-employment tax on the front end of your tax return, but that's like a whole nother discussion. Again, Big Beautiful Bill, there is a bunch of new deductions. Also, if you are getting close to that senior age, that 62 range, then you're going to be eligible for that senior discount as well. Again, of course, within income limitations. But yes, you're going to be able to qualify, and that's going to help you figure out exactly, do I need to pay as much taxes that I paid in the past? So these are definitely great things to go ahead and look at. Now, the fourth thing is we're going to go ahead and make sure that you review your home office, you're going to review your mileage, and you want to also review all of that mixed use property that you have. What's mixed use property? Well, it's that laptop. Mixed use property is things that you're used for both personal and business. Things like your laptop, your car, those are all things that are most typically in small businesses are mixed use property Because of that, you want to make sure that you are separating your business use and your personal use in both of those items. Same goes with mileage. You want business miles and personal miles separated. So that way you have an accurate amount of how much mileage you can actually take, whether it's going to be on the actual mileage or on the standard mileage rate. You're going to want to make sure that you have that split. And then as far as home office, as we've discussed in the past in my videos, you want to make sure that you're using it for exclusively for business and that you're not using it as a guest room. You want to go ahead and review all of those items before the end of the year to make sure that's being done. The fifth item is the estimated quarterly tax. You want to make sure that you get that final payment in on January 15th. Now, when you go in, you're like, oh, why do I have to make a payment on January 15th when I'm going to make another payment probably in April? Well, this is where it gets smart on your end. If you go ahead and you've done step one, which I've already talked about, which is review your income, and you saw that you have not made enough in estimated payments because you had made more money than you anticipated, this is kind of when you can play catch up and pay up to what you think or what it looks like you're going to have to pay for the year. Because if you don't pay that for the year, you're going to have to pay it on April 15th. Well, instead of waiting until April 15th, do it on January 15th. Because what happens for most of my clients who are self-employed, when they may overpay on that last payment in January 15th, they tend to get a refund on April and they don't have to pay more for April for the 2025. They're only paying their quarterly payment, or they take the refund and they apply it to their first quarter payment for estimated taxes. They do that as well. So it's a nice little bonus. If you go ahead and look at your income now, make sure that you have enough that you're going to be paying for your final quarterly payment so that when April comes around, you are actually paying less for your taxes, or you're getting a refund, or you are going to go ahead and just be paying your first quarter payment and that's it. Now, if you're a W-2 employee and this doesn't apply to you, that's fine. You're still going to want to look at your income on your pay stub, make sure that you had enough taxes taken out. Because if you didn't, and you look at your income for both you, and let's say if you have a spouse, or if you got some additional income, let's say you guys had a windfall and you were really great at the casino and you won a ton of money, then you're going to want to make sure you're including all of that income, make sure that there's enough taxes taken out. If not, just ask your employer, please take out more taxes. So that way at tax time, you either are getting a refund or you're paying a lot less back to the IRS and you're not getting penalized for paying under the amount that you were supposed to. And that goes for self-employers as well. If you pay too little, you will also get penalized as well. Now, the sixth thing is you want to make sure is that you organize all of these documents. And you want to organize your receipts, your records of anything for your income, your expenses. You want to get them all together, file them all, make them all nice and neat. And you're going to want to do this so that way for the remaining of the next couple months, you can just grab those receipts and throw them in the corresponding spots. So they're all there, they're all put together, and your CPA and your accountant will love you. They'll call you client for life because they'll say you're just so wonderful. We love it when our clients come in with organized documents because it makes the job so much faster, and it also helps us get your tax return out much faster. And if you're sitting there with them, it will make the time for your tax appointment go a lot faster if everything is all together. So the seventh thing we want to talk about is moving on to 2026. You're going to want to go ahead and now look at all the deductions that you qualify, including the new stuff that came in with the big, beautiful bill, and see how you can maximize your deductions for 2026 and start planning now. You want to start planning now, so this way you can start taking action on January 1st. Don't wait until your tax appointment. Start on January 1st and start preparing, because once you start preparing yourself, you can always make adjustments again, but it's terrible to try to play catch up these last couple months. With the big, beautiful bill coming out mid-year, it was, of course, an adjustment for a lot of people, but it was enough time for employers to make sure that they got everything for their employees. But now we've got a full year to take advantages of all these deductions, the tips deductions, the senior deductions, the new clean air rules, the new vehicle rules for the car loans, and the 1099K limitations. We've got all of these new rules that we can start looking at. So look at those. So there you have it. Those are my 7 suggestions for getting ready for the end of the year of 2025. If this helped you at all, hit the likes button down below. And if you want more tax tips for the future or coming up here in 2026, please hit the subscribe button. Also, share this video with any of your friends who happen to be gig workers or self-employed. Let's go ahead and make this April surprise a good one and not a stressful one. Keep on sipping. Have a good day.